Now, moving on to our next speaker. As we all know, working in the heavily regulated environment of financial services, in particular insurance, brings with it additional personal and professional obligations as internal auditors. As we know, the Solvency II directive, as amended by the Omnibus II directive, became fully applicable to European insurers and reinsurers on the 1st of January 2016. It covered three pillars: capital requirements, risk management, and supervisory reporting. I am delighted to introduce to the forum Ana Teresa Montinho, who will provide Iopa's view on the current legislative initiatives impacting internal audit. Ana Teresa is the head of the Supervisory Processes Department at Iopa. She's responsible for Iopa's activities related to supervisory review under the Solvency II data and business intelligence tools and operational methodology and the monthly production of Solvency II technical information, such as the risk-free interest rate structures and its associated components of volatility adjustment and the fundamental spread, index for equity and systematic adjustment. Prior to joining Iopa in 2012, Ana Teresa worked for 15 years in the Insurance and Pension Funds Portuguese Supervisory Authority, where she gained extensive experience in the supervision of the insurance market. Having started as a supervisor, she's involved in the development of the Solvency II project from its beginning. Ana Teresa holds a university degree in Management and Advanced Studies in Financial Markets and Risk Management and Derivatives, and in reform of the financial regulation after the international financial crisis. Ana Teresa, it is a great pleasure to have you join us today, and we're very much looking forward to hearing your presentation.
Thank you. Thank you very much. And it's really an honor to be here and present on behalf of Iopa to a profession of internal auditors. As you might imagine, we have more interactions with the actuarial function, risk management function, because of course, traditionally from an insurance perspective, that is relevant. So I'm very happy for this opportunity and to present to you as well the new challenges that we see for the profession and also how we see internal audit within the Solvency II, actually now also as a follow-up of the review. So it will be a mixture of, how we see internal audit, things that, you know by heart, and sorry for that, to recap some of the issues, but highlighting some important messages. But also I'll try to focus, in the second half of the presentation on the challenges. And you'll see that the challenges that are here, they are pretty much linked to the risks that we have heard already, that have been identified. It's a lot about digitalization and the impact of digitalization as well in the insurance sector. So if we can move to the first slide. And I think it's very important because now, especially now that we are discussing the Solvency II review, it's clear that everyone, the focus is really pretty much on the Pillar 1, on the quantitative requirements. And this is because, of course, capital requirements, long discussions on equity risks, long discussions on the VA, on the risk margin calculations. And it seems that when we address Pillar 2 and the review, it's all about proportionality, how to make it proportionate, focusing on the burden. So I wanted to take this opportunity to say that, yes, proportionality is important. And yes, the discussions are pretty much focused now on Pillar 1, but that doesn't mean that the role and the importance of Pillar 2 is diminished. We should not undervalue its role. And from Iopa, that is clear. It just means that the basics and the foundations are there. We just need to get the right balance in terms of proportionality, and that's why we are discussing this. But we truly believe that it's one of the most important pillars in Solvency II. And why do we believe this? In the next slide, you will see, and this is valid for a long time. In the introduction, you will see that already in Portugal, I was involved in the beginning, really beginning of Solvency II. And I was actually part of the Sharma report, which was delivered even before the first proposals on Solvency II. And this Sharma report, which was assessing the Solvency I at the time, really tried to identify the most common causes of insurance failures and near misses. And clearly, one of the ones that were identified was in fact internal governance and control risk. And you can find that in the top, on the failures and on the near misses, and that has not changed in the last 15 years. So the causes that we have identified in the Sharma report, which led to a strong Pillar 2 and a strong system of governance within Solvency II, actually remain. We follow these on an annual basis, and it's, the causes remain. So it's absolutely crucial that we continue to put the focus on the Pillar 2. Now, it is difficult. It is a difficult pillar. And in the next slide, you will see that actually why it is so difficult. It is difficult because it's qualitative, it's judgmental. In fact, each undertaking is unique, and they will have a unique system of governance. Nothing in governance it's white or black. There's a huge shade of colors in between that might be adequate for one company but not adequate for the other. It is absolutely crucial that governance keeps on constant evolution, and the challenges that we will address today, it's a living proof of that. And also because it's about the culture. So having an internal audit within a company, and this was new with Solvency II in many countries, was already existing in others. For example, in Portugal, we had the 3 functions already in place, but not the internal audit. So I think as a mandatory requirement. So it is new, and it's about the culture. It's about having internal auditors inside, being independent, and being free in terms of what they do, who they talk to, what they challenge, etc. And then at the end, supervisors are not business managers. So it's not up to supervisors to decide on the system of governance of each company, to decide on how the different key functions are organized, etc. So these factors make actually the system of governance and the supervision of the system of governance a big challenge to supervisors. Now, actually, in terms of requirements, in the next slide, it's pretty much straightforward, right? It's about having an effective, proportionate, and regularly reviewed, so that you have actually review it very regularly, system of governance. It's about having the right persons doing the right tasks, so that they are fit and proper to do the tasks that they should do. It's about having policies in place that are known, that are regularly reviewed. It's about having in place the key functions and the proper key functions, to have the 4 eyes principle, that you have at least 2 persons actually running the undertakings, be transparent in the organizational structure, clear allocation of duties, segregation of responsibilities, having contingency plans in place. So at the end, if you look to the requirements, the level 1 requirements, that they are in fact straightforward. The implementation is, of course, the challenge, and that's where we also put our attention. So if we go to the next slide, again, I think the previous speaker also talked about this, the relevance of the 3 lines of defense. And in fact, that's how we see it. That's how we also see Solvency II being implemented. You have the first line of defense, which is the operational functions. You have the other 3 key functions which work as the second line of defense, and then internal audit function works at a different level as the third line of defense, as an independent assurance with the role of actually assessing the effectiveness of the other key functions as well. This goes without touching or putting at stake the ultimate responsibility of the AMSB, which Solvency II clearly stated as well, and it was really a very important feature of Solvency II. So if I go briefly now through the key functions and the interaction of the key functions with the internal audit function and what we expect. So again, and this is, I'm aware this should not be new for you. You have the risk management system. They basically are, in charge of everything in terms of the risk cycle, identifying, measure, monitoring, mitigating, and reporting those risks to the MSB, covering all the material risks that are identified, and they should be subject to the evaluation of the internal audit function. So this is absolutely crucial, that there is an independent review on the effectiveness of the risk management function. A similar approach is applied to the actuarial function in the other slide, and being the actuarial function really characterized by an area where the fitness and propriety is absolutely crucial. We are talking about a very technical function within the undertaking. They are responsible for monitoring the calculation of the technical provisions, and that, of course, depending on the complexity of the business and the nature of the business, this could be actually technically complex. They should also deliver an opinion on the underwriting policy, on the reinsurance arrangements, and should contribute to the risk management function. So there is, in fact, an interlinkage between all the key functions. And again, internal audit this is also be subject to the evaluation of the internal audit, not only how actuarial function functions, but, for example, also how the actuarial function interacts with the risk management function. Finally, the compliance function, a more straightforward one. They should be in charge of the compliance with the laws, regulation, and administrative provisions, try to identify any legal risks in the future, legal improvements or changes that might imply the compliance of the company and raise some compliance risk. And again, without any surprise, it should also be subject to the evaluation of the internal audit function. So if I can focus now on the internal audit function, again, in the next slide, in a nutshell, you should have an effective, objective, and independent from operational functions internal audit. And as said already, you should evaluate the effectiveness of the internal control and the risk management system, so of the elements of the system of governance in general. The findings and recommendations should be directly reported to the MSB at least once a year, and you should be free to develop your own audit plan covering any activity. You should cover all activities within a cycle plan. It doesn't mean that you need to cover all activities in a yearly basis, but you need an audit plan in terms of a cycle, making sure that all activities are covered, in particular the material ones. And of course, you can use a risk-based approach to identify the areas where the audit will focus on each year. But it's absolutely key that you are independent, not only in the performance of the audit, but also on developing this audit plan and the audit plan cycle, choosing the areas where you will go into. So in the next slide, it is envisaged and clarified that, of course, you are responsible to deliver the findings and recommendations to the AMSB report.
Well, whatever it is, it's...
in the next slide, please. But of course, it's the responsibility of the AMSB to decide the actions to be taken upon those recommendations. So it's their responsibility to receive them, to analyze and decide which action should be taken. And then the responsibility goes back to the internal audit function to verify compliance with the AMSB decisions. It's true that if you go through level 1, level 2, our own guidelines from Iopa side, you don't find a lot of details in terms of how to perform the task. Contrary to other internal function, to other key functions. But that's also because, of course, there is a lot of reliance on the international standards for the profession issued by the Institute of Internal Auditors, and of course that is part of supervisors to make sure that you also take them into account. And if you do, it's in fact a very good signal and a very good, a positive sign on how the internal audit is implemented in that company. So if I can now move to the relevant documentation, because I think, and this is key for supervisors, because internal audit needs to do their job on an independent way, and it should document its tasks and the audits that they perform. And I included this slide because the documentation, which it's linked to the internal audit function and the performance of the audit function, it's absolutely key for supervisors. So, as long as the independence and the fitness and propriety of the internal audit function is well supervised by supervisors, then a lot of reliance can be put in all the documentation. And this is, of course, the internal audit policy, the internal audit plan, written reports on findings and recommendations to the MSB, but also the documents behind, working documents, relevant documentation exchange between the actuarial function and the MSP, relevant documentation on exchange between the internal audit and the departments that were audited as well during the audit, or any records related to internal work. And these are documents and it's documentation that, for example, when the supervisors go on an on-site, could be absolutely key to identify risks within the company. And I mean, it's for sure that supervisors will use it. Now, having went, I tried to go, fast and not boring you with things that you already know and it's your day-to-day job. But I thought this was a good introduction then to introduce you now with the new challenges of the internal audit and how we see the internal audit moving on in the future. I wanted to start with this figure because I think it summarizes a little bit also what was identified as the risks and the challenge for the insurance business. Yes, we are observing a digitalization of the market. I mean, some companies are pursuing now digital business models, and that is a reality, and that will increase. I mean, as you know, we are as Iopa and Iopa together with EBA and ESMA issuing and finalizing a report which for a call for advice we received from the Commission on Digital Finance, where we have identified a huge number of different ways of digitalization of the market and also the consequences of the digitalization of the market. So this, of course, has an impact on the companies, has an impact on the key functions of the company, and this needs to be taken into consideration. Of course, we see as well a big link to cyber underwriting and cyber resilience. I mean, why? Because digitalization of the market, it's happening not only on the insurance business, but on the digital economy. And for us to promote the digital economy and being an objective from the Commission as well, we need to have a very sound cyber underwriting market. We need to have insurance companies that are able to cover the risks of the market in terms of cyber. And a well-developed cyber underwriting market will, in fact, promote the development of the digital economy. On the other side, we also need to accommodate and take into account the undertakings on resilience, the digital operational resilience of the companies. And that, of course, is also very relevant and even more relevant for the insurance companies pursuing digital business models, because, of course, they open themselves to higher risks in terms of cyber. Finally, SupTech, and I found it interesting because I think this SupTech is a little bit similar to the presentation you will have after on data analytics and how data analytics can support the internal audit function. On SupTech, what we do is exactly to analyze how these new technologies, how this digitalization can also help supervisors improving the practices and the tools that they use. So in terms of SupTech, that's what we also are focusing on. Now, if I can go a little bit into what this means for you, what this means to the internal audit profession. I think it is clear that you will work, and some of you will work on companies which are at the moment pursuing already artificial intelligence and using artificial intelligence in some of the value chain or in part of the value chain of the insurance sector. So some companies are using artificial intelligence on product design and development, using predictive modeling, etc. Pricing and underwriting. I mean, they can use algorithms for price optimization, using not only internal databases, but also external databases. Some of them are using simple on customer services, chat box or call services. Others are using on claims management on trying to identify fraud. So artificial intelligence is actually now in use in many different ways throughout the insurance sector. And this has an impact on you as internal audit. So if we go to the next slide, this has an impact because on the companies that are pursuing more digital business models, and in particular the ones that are using, for example, artificial intelligence in any part or in many parts of the value chain, the governance framework is changing because you need to adapt to the use of the artificial intelligence. You need to take into account the risk of the use of the artificial intelligence, being the risk of the data leaks, being the risk of using wrong algorithms leading to wrong predictions or wrong results. It's being that you have new data sources that you need to make sure that they are adequate, that they are good for training the algorithms, that they test, that the algorithms are tested so you don't have wrong results coming out. So the governance is changing along the way, the use of artificial intelligence, and this is absolutely key for internal audit as well, because we do expect auditability of most of these processes. So if we go to the next slide, Iopa has been working in this area and has published a report on ethic rules when use of artificial intelligence. And in here, I wanted to really highlight this paragraph because it really highlights in this report, and this is an extract of the report of Iopa, where it's highlighting really the importance of the audit, of internal audit, towards this, the use of these algorithms, the use of artificial intelligence in different processes within the company, and the fact that also in here, the findings of the audits will be identified as positive or negative indicators of how artificial intelligence is being used and how adequate is being used in that company. So if we go to the next slide, the basis for this work, and I think it's something, it's a very relevant document that was published some time ago for Iopa. We have worked with the market, so it's the result. It's not an Iopa pure and traditional document. It's the result of an expert group where we work together with the industry, identifying the key principles. We thought that soft law was actually the right next step in this area, and the principles that we have identified. I mean, it was the principle of proportionality, because of course it really depends on how you are. In which processes and the level of risk of the artificial intelligence processes that you are taking within the company. Principle of fairness and non-discrimination. I mean, to make sure that the algorithms that are being used will not lead to unfair treatment or discriminating anyone. Principle of transparency and explainability, and this will be very important for the profession, as you will see in a minute. Principle of human oversight, that there will always need human intervention. Principle on data governance and record keeping, again, it will be very relevant for the profession. And of course, robustness and performance of the algorithms that are being used. And these key principles should be the foundation and the principles to be taken into account when you try to identify the impact for the internal audit function of this work. So in the next slide, you will see actually extracts of the same report addressing the principle of transparency and explainability, and the principle of data governance and record keeping, where again the internal audits, the performance of internal audits, and how the results of the internal audit is important for the companies that are pursuing this path. So explainability, it's about auditability as well of the processes. They need to be auditable, and if they are not auditable, of course, the risks increase. And also in terms of data and data keeping, and that was also something that was identified before. It's a key risk. I mean, the risk of data leakage is absolutely key, and of course that you need to have proper records on to make sure that this is being taken care adequately and used adequately within the company. And I think with this, if I'm not mistaken, it's I have one final slide actually on this. If we can go, the report also identify the role of the different actors within the company when a company uses artificial intelligence. And as you can see, I mean, this varies, of course, depending on the impact. Again, principle of proportionality depends on the impact of the process that is using artificial intelligence. But as you can see, actually, for the profession, internal audit, we always believe that they should be informed regardless of the level of risk of the AI service and of the AI process. So again, very key for all internal auditors to be involved in here. Now, this was the first challenge that I wanted to present, which is the use of artificial intelligence is one specific part of the digitalization of the market. The other one, as I said, is the resilience. It's the digital operational resilience of the company. And if we can go now to the next slide, please. In this area, I mean, Iopa has in fact released a number of guidelines as well, and it's absolutely key that we are all informed of what's happening and the future requirements in terms of the Digital Operational Resilience Act that the Commission is discussing. So again, in here, we turn our focus to the own resilience of the company, that to make sure that the company is resilient from an operational perspective. And if you look to Solvency II, I mean, what Solvency II has is, of course, general requirements on risk management, including operational risk, which is at the end what we are talking about in here. But of course, considering the digitalization of the market and the increased risks that we have observed here, it was identified the need to be more specific in terms of the requirements and to be more specific in terms of what we expect from undertakings. That's why Iopa released 2 guidelines in the last years: the guideline on cloud outsourcing, being cloud outsourcing one of the features that is evolving in the market, a guideline on ICT governance and security, and again, as well, we are now discussing DORA with the Commission. If I can start with the guidelines on outsourcing, again, I mean, cloud computing is being used, I mean, very, very extensively by the insurance market. They are using it to optimize the expenses, the IT expenses. They are using it because they are using larger sets of data. They are using big data now, I mean, in particular, for example, to use artificial intelligence tools. So the cloud, it's many times the only possibility to do that. So as part of their own digital transformation strategy, they start using the cloud, which is fine and expected, but of course raises some issues. So if we can go to the next slide, with this growing of the use of the cloud, I mean, this is happening in niche with niche players, but not only, also with the traditional players for the reasons that are explained. And actually, in a survey that we did on 2019, around 65% of the participants said that they were already using or planning to use cloud computing in the future. So this revealed really the need for Iopa to act, to release guidelines on this area. Of course, considering that it's not homogeneous within Europe, and we see some members moving faster than in others. So on the next slide, you'll see really a summary of the guidelines. And of course, without surprise, the guidelines are mostly about governance. That's the reality. So it's about general principles on the governance, documentation, on the analysis that you need to do before entering into the outsource, into the contract with the third-party provider. So to do the pre-outsourcing analysis, to assess the risk, the increase also in terms of the service provider that you are using, that you perform due diligence in terms of the contract. It goes into details of what to expect to see in the contract requirements, in terms of security, in terms of accessibility, in terms of auditability as well of the service provider. And then, of course, making sure that the contract also takes into account termination rights and exit strategies. So again, a lot about governance, where, of course, the internal audit will have a specific role. And if we can go then to the next slide, I identified the specific case where the guidelines also refer to the internal audit, because we do expect that when a company goes into the cloud and use cloud services, and again, principle of proportionality applies. It depends on for what the cloud is being used. And again, if we go to the extreme scenario, the cloud is being used for data that is used on artificial intelligence processes, for example, then of course we expect a higher risk than in other cases, but always we expect a review of the role and responsibilities of the key functions, including the internal audit, in relation to this outsourcing to the cloud. So if we can go to the next slide, focusing, and this the guideline came after, so it's guidelines on ICT governance and security in general, so addressing really the digital operational resilience of the undertaking. And again, we identified the need to make this clear, because cloud outsourcing was focused on a very specific point of the digitalization, and we wanted to start focusing really on the general operational resilience of the company. The content of the guidelines, again, goes through the system of governance, strategy, policy, audit aspects, information security policy and function, logical and physical security. So it goes from software to hardware, and really physical security in terms of premises of the insurance company, and then goes into detail in terms of ICT risks, ICT risk management, what we expect to see in terms of recovery plans, the testing of the plans, and also crisis communication in case when you have a cyber incident, for example. And I see that you have also cyber incident in your program today, so I think we are pretty much aligned with the challenges and what we are facing at the moment. So if we can go to the next slide, also in here we try to reflect on the guidelines, the importance of the audit plan, that the audit plan takes into consideration the digital operational resilience of the company, that takes into consideration the ICT risks of the company, and that is reflected in the audit plan and the audit plan cycle, and that you take this into consideration. It's also absolutely key that in terms of information security standards, compliance reviews, and internal and external audits of the information system, this is included in the plan and how you perform internal audits. So it's absolutely crucial that the security aspect, security function, because we refer to a security function in our guidelines, so not considering it as a key function, but an important function in terms of the ICT, that this is also taken into consideration when you are defining the audit plan. Finally, of course, this can be all considered now as preparatory work. And preparatory work for what? Preparatory work for the Digital Operational Resilience Act that is being discussed in Brussels. So in the next slide, and I wanted to finalize the presentation with this, also to give time for Q&A. It is very important that you are kept up to date with the developments that are going on. So actually, it's we are almost on the trilogue phase. Trilogue should start beginning of 2022. For the ones that don't know, trilogue begins when you have a Commission proposal, an agreement in terms of the Council, and also report from the European Parliament on this Commission proposal. We have that. Voting should be this week, I think, on the European Parliament. So in generally, the trilogue should start, and we can expect a deliverable mid next year. And what does this mean? It means that by mid next year, we will have a new act which will apply across the financial sector. So it has within the scope the insurance market, pensions market, insurance intermediaries, but also banking, asset managers, even auditors in the proposal of the Commission. So external auditors. We don't know, of course, what will be the final. This was one point that was discussed, but even external auditors are also included. And what is the goal of this regulation? It's in fact to make sure that we have a financial sector which is resilient and which has adequate digital operational strength. And for this, it goes through requirements on governance. And in here, I must say that they are very similar to our guidelines on ICT security and governance. They go into more detail here and there, but in terms of principles, they are fully aligned. In terms of the ICT risk management as well. So both documents are fully aligned, and we are very happy to see that our guidelines will actually contribute to the level of preparedness of the market to the implementation of DORA. But then, of course, it goes extra steps because it also has a framework for cyber incident reporting, a cyber incident reporting which is aimed to be harmonized, focusing on the major cyber incidents in terms of reporting to the national competent authorities, but that actually requires the companies to actively monitor and have an ICT-related incidents log for any cyber incident that happens. So internal documentation and then requirements to report major incidents to national competent authorities. It also goes into more detail into the digital operational resilience testing. This, I think, will be also very important. And in here, what is important to highlight is that the regulation will require a threat-led test for the big companies, but it keeps open for all the remaining ones. So who will be the big companies that will need to do this stress-led test? It's up to the ESAs to decide on future technical standards, so it's not defined there. But it's clear that we'll need to also to develop a framework where it's clear which type of resilience testing we expect from the ones that will not be covered by this stress-led testing. And this, I think, will be key as well for the future of the profession of internal auditors. If we go into the next slide, this is not so much linked, but of course it's part of the framework. So I wanted to also inform you. It's, the ICT third-party risk. This is, of course, also impact you because it goes into detail of what is expected in terms of monitoring of this increase risk. But finally, and this is more than targeting the supervisors, it also proposes an oversight framework for the third-party providers. Not any third-party provider, the ones that will be considered critical for the financial sector. So the three financial sectors, in a whole. But when they are considered critical, and as you know, many of these third-party providers deliver services for the three sectors and might become critical in that sense, they will be subject to the oversight of a lead overseer, which will be one of the ESAs, and which ESAs will be, it depends really on the market and on the sector where the third-party provider is more active. Again, this is under discussion. What I included here was the Commission proposal, which was public last September. So last September 2020, not 2021. And this will go on, and we will for sure have an oversight framework. We will for sure have a regulation. Of course, the final text, it's still up to discussion in Brussels. I think, if I'm not mistaken, this was my last slide, and I'm happy now to open the floor for Q&As. Actually, there is some examples there, but I think we can pass that. Examples from the regulation where with references to the internal audit, but there's no news there. I mean, it's similar to what we have in the ICT guidelines, and again, making clear that in terms of governance, the actuarial function and the actuarial profession is absolutely crucial in the insurance sector. And thank you for your attention.
Anna Teresa, thank you so much for that wonderful presentation. It is incredibly valuable to us as internal audit practitioners to hear the views of our regulators, and thank you for setting them out very clearly and very precisely. The timing couldn't be better from our perspective. Many of us are putting our plans together for 2022. And therefore, it's great to get your insights and thoughts around key priorities. So thank you again. So just to remind everybody about how we will do the virtual Q&A session. You can submit your questions via Slido by scanning the QR code that will lead you to a page, and you can just type in your question. If you're having problems using the QR code, there's another way of doing that. If you go to slido.com, and enter the code #EIF2021. That should help you submit your question as well. So, Anna Teresa, as I'm in the hot seat, I get the privilege and of being able to ask you the first question. I am very curious to understand from your perspective and Iopa's perspective where internal audit can really add the most value. And I am genuinely curious to know, since the introduction of Solvency II, what do you think internal audit has helped add in terms of value to Iopa's goals and objectives?
Thank you very much for the question. I think, as I said, I mean, as long as we have an independent internal audit function, which is one of the requirements of the Solvency II, and that is supervised by the supervisors, I mean, the independence and fitness and propriety, it is really valuable because, of course, all the documentation coming from the internal audit can be used by supervisors, and that is absolutely key. So it's actually it's the third line of defense within the company, but maybe I'm inventing this now, to be honest, maybe the first line of defense for supervisors, because of course it's a good step to start from the findings of the own internal audit of the company to identify risks in terms of system of governance. Of course, that we are talking about risks in terms of the system of governance. So I think it's absolutely key. And I think the fact that supervisors look at internal audit this way, it's really the result of what I'm saying, that in any new challenge where we deliver documentation, where we deliver guidelines, where we deliver reports, internal audit is highlighted. It was highlighted in the guidelines of outsourcing to the cloud. It was highlighted on the ICT, and it will for sure. I mean, on the climate and sustainability, I'm not following so closely, but I will follow up with colleagues for sure to see what the role could be there. But this is a clear message that we see internal audit as a key aspect within the company, and really, I mean, when we do an on-site, for example, or when we do supervision on Pillar 2, the first place to look. And I think this is absolutely key. And as I said, I think it's very useful. And the Solvency II just proved that. One of the things that I maybe I would highlight, it's of course to be kept as it is, and with a very important role within the entity, it is absolutely key to adapt the knowledge of the internal audit, because it was a challenge. I know when we introduced Solvency II, insurance is very technical. I mean, in some aspects, I mean, in terms of the liabilities in particular, in the liability side, it's very technical. So there was a huge effort from the profession to get knowledge on the area of insurance, to be able to perform good controls of, for example, the actuarial function. And now new challenges come, because when we talk about ICT, we do expect, and the guidelines highlight that, we do expect internal audit also to have expertise in the area of the ICT. So the scope of knowledge of an internal audit function within the company, it's increasing. And I think that to keep the role relevant, I think it's very important for the profession to be aware of that and to invest in that, invest in training also from the professional actuaries, and to have dedicated documents and papers that support the auditors in these different areas. It's absolutely key in our view. The same for supervisors, by the way. We face the same challenges.
we all have the same challenge.
Yes. Yeah.
That's wonderful. I mean, just going to a question from the forum. It's an interesting question. I mean, you raised the whole topic about cloud. I'm pretty sure all of us, if not the majority of us, have the same concerns as you do, actually, around how to get assurance around cloud and big cloud providers. So I'm curious to know whether you or Iopa really has a view on how we should go about auditing cloud providers. I mean, it's very difficult. There's only a few of them. They're very big, and many of us are very small in comparison to their global clients. Do you have a particular view on that?
Yeah. It's of course a very difficult subject, and I think that the cloud guidelines try to address that from a requirements perspective, but I mean, not from a practical perspective. I mean, and I think DORA will support in the future for sure, because of course the big clients, the big providers, as you are referring to, will for sure be identified as critical third-party providers and will be subject to oversight, and that of course will support also the companies that are using them. Until we have that, I mean, it is critical that the contracts are well developed, and I mean, for some time, Commission was expected to work, and that was referred as well in DORA on contractual, on standard contractual clauses. That they were not out, so that reveals actually the challenge that it is also to have this. So it's in fact difficult discussions. What I would say is that if you are using a big, but this is, I mean, also my personal view, if companies are using a critical, really high risk, and you don't get from the service provider the contractual clauses that you expect to get from our guideline, it should be reconsidered. The risk should be identified and then, of course, mitigated or avoided. I mean, and again, this is an internal decision, but we highlight the risks. We put forward the solutions. We are aware that the solutions are not always possible, but then it's for the company to identify, discuss, take decisions, mitigate, and be able to explain. Now, DORA will change this. With DORA, of course, they will be subject to oversight. There are also contractual requirements on DORA that are expected to exist. And of course, in that case, if you don't get them, of course, the lead overseer will be able to engage as well with the service provider to make sure that this is in place. But auditability, and I think it should be clear that also the access from a supervisor perspective is needed, because of course, outsourcing requirements from Solvency II still apply. So in there, it says that we as supervisors should be able to enter in terms of supervision. So to guarantee one, you should to guarantee as well, of course, the ability of the internal audit to play their role also on outsourcing. But it's in fact a difficult situation, and we do expect that DORA will solve some of the issues.
Great. No, thank you. And I think that's incredibly helpful guidance from you. Just one other question. It's again around IT, actually, probably reflecting the whole topic of technology and how important it is to all of us. But it's a question about the ICT governance and security, which says that the IT function should report to the AMSB. Is that what you normally see, and is that have you any guidance or insight into what's actually happening and your views on that?
Yes, no, that was actually a very discussed point on the public consultation. I think for you to get the full view of Iopa, you need to read our feedback statement, because I remember that there was some explanations there. At the end, we took out, I mean, for the ones that remember more clearly the consultation, we took out directly. So on the consultation, I think there was directly to the MSP. We took that out and we explained in the feedback statement that we don't see this as the third defense model. It could be the second defense, and that depends on the organization of the company. Again, we don't want to tell company how they need to organize. What we meant is that the report should arrive to the MSB. If it's through second level of defense or third level of defense, it's also up to the undertakings to decide. But it's of course important that these findings arrive to the MSP and are discussed at the MSP. So please take a look. Also the colleague that did the question, also to the feedback statement. I remember that there was a balance in terms of the wording, and we explain it better there. And if there's still doubts, of course, you are happy to contact me, and we can proceed from there.
Great. Anna Teresa, look, thank you ever so much again for agreeing to come and talk to us today. It is genuinely a privilege for us to hear from you and hear your insights. Thank you ever so much, and I hope that we'll be able to meet at some point and we'll be able to talk some more. So thank you ever so much, and thank you to everyone for submitting your questions.
Thank you very much.